Okay, we're going to make a start now. We still seeing registrations tickle in, and it looks like it's going to be a really good session today. Obviously, today we are talking about electric vehicles and particularly salary sacrifice schemes. Over this last few years, salary sacrifice EV has been credited with huge increases in the uptake of electric vehicles. In fact, last year, 250,000 EVs were purchased, and that represents 1 in 6 new vehicle sales, an astronomical growth from where it was just a few years ago. And salary sacrifice EV schemes have been what has allowed more employees access to EVs. It's something that's of huge interest to our clients, and that's why we have put on this session today in collaboration with Octopus EV. So Mobilityways, if you are new to us, we are the leading experts in the UK on helping large employers to measure, reduce and report commuter emissions. And because of that, there's a huge synergy with increasing uptake of EVs because they have zero tailpipe emissions. Now, of course, we know that EVs are not the answer to everything. They don't help, particularly with PM10 air pollutants from the particles released from car tires. They don't help with congestion, but they certainly do help towards tailpipe emissions. And we see inquiries all the time from our customers asking about EVs. And this is hopefully going to be a really good session to educate us and explain how salary sacrifice schemes work, what best practices. And that's why we brought the UK's experts, Octopus EV. Octopus EV, I think they've got north of 300 employees now in the UK, and they are purely dedicated to electric vehicles. They don't do any legacy work, and that means they really are subject matter experts. So we're joined by over 170 registrants for this session today, and for you to get the most out of it, please do add questions to the Q&A panel in Zoom. We'll be doing a Q&A session at the end, and it doesn't matter what your questions are, whether they seem simple, whether they're controversial, and this is the time to ask them. And so please do add your questions throughout the webinar. As they come to you, add them straight in. You can add them anonymously if you like, and we'll then come to them at the end for hopefully a lively Q&A session. Without much further ado, I'm going to hand you over to Octopus EV, and Stefan Fowler joins us now. Over to you, Stefan.
Hi, morning. Thanks so much, Basil, and nice to speak to everybody today. Great to be here, and looking forward to talking in a bit more detail around electric vehicle salary sacrifice schemes and some of their best practices. I'm also joined today with my colleague Tom Baker, who will be taking the second half of the slides today and talking more detail around the best practices. But in terms of what our plan is to cover in our slide deck, if we're okay to just pop to the next slide. We're going to talk about a few things. We're firstly going to talk a bit more in detail around how electric vehicle schemes work, the semantics around salary sacrifice and some of what the tax takeaways can look like for both the employer and the employee. And then we will then talk around why an EV scheme makes sense in the current climate and the current focuses that, again, employers and employees alike are facing in current challenges. And then we'll then talk around how we can assist as Octopus EV to ensure that a scheme that you may decide to launch in the near future can be successful, can be promoted across your business, no matter how large you may be. And then we will then loop back into how we work with Mobilityways to really strengthen that focus on sustainability between our scheme and the work that the Mobilityways team do. As Basil mentioned, we're really keen to hear from everyone kind of in attendance today, so do use that Q&A panel throughout the session, and we will loop back in and support any questions just towards the end. So without further ado, if we just move to the next slide, please. So in a very quick snapshot, EV salary sacrifice is really focused around a business leasing vehicles from Octopus in our instance, and providing these as an employee benefit to the employee. The huge benefit to the employee is that for all of the monetary sacrifice or the salary sacrifice the employee makes, they no longer pay income tax or national insurance on this amount. So the savings could be anywhere into the multiple hundreds of pounds. We do have a slide later on that just gives one example across our business. As mentioned before, this is an employer a benefit that only an employer can provide. So this is not something you can get on the high street. It was really there as a stake in the ground, kind of mentioned from the business, saying that we care about the employees, we care about the environment, and we want to make the sustainable right choice in so many different ways. And through Octopus EV, we can provide a number of different setups for this benefit, to be anything from cost neutral to something that is able to save the business some money, and ultimately also drive those huge savings for the employees as well. Just get through to the next slide, please. Thank you. So again, to go into a bit of detail of how salary sacrifice works itself, there are a lot of salary sacrifice products available to employers to add as benefits into the workplace. So it may be something that a few of you on the call today are quite familiar with. For those of you that maybe this is the first time exploring it, it's a relatively simple concept, but it does involve going through your payroll. As I mentioned before, there's a lot of them out there. Cycle to work is probably the most common out there, along with certain pensions. And the real idea here is that the employee will gain access to some form of goods or equipment, or a car in our instance, and to gain access to that, they make a deduction from their pre-tax pay. So the pay slip drops, but you no longer pay your income tax or national insurance on that as an employee, and that therefore drives in quite a hefty saving. It is worth noting, as these vehicles are provided through the employer, they are treated as a company car, and therefore there is a small company car tax that is again processed through the pay slip or through your tax code. This on an EV is incredibly low. It's at 2% of the car's P11D value. Again, I've got an example in a few moments time to show what that looks like. Comparing that to the world of petrol and diesel cars, they often sit anywhere from 15+%, sometimes reaching up closer to 30% as well. So the tax that you pay back to HMRC as a company car is minuscule compared to the amount of income tax and national insurance able to be saved. If we just head to the next slide, please. So here is a live example taken from our quotation tool. A bit of a hectic slide, so I will talk it through in a bit of detail. So what we'll start with is just the person looking at a car here. So this is George, living over in Hampshire, and is a 28-year-old taking home a salary of £35,000. So essentially a basic rate taxpayer. He's looking at one of our smaller hatchback EVs, the Aura Funky Cat. And based on his salary, we've split this out in two examples on the screen. In the middle of the screen, you've got what his payslip would look like with no form of salary sacrifice. So before he's opted to get a car through the scheme. And what you're seeing is his gross salary at the very top there at £2,900 odd. Then what you would expect in the payslip, you then have to pay your income tax and national insurance. And then you have your take-home pay of just over £2,300. When you build in a salary sacrifice for the car, this is going to include everything that the vehicle, the car may need. So this is going to include insurance, road tax, servicing packages, AA coverage, the works. And you are going to, as George is going to need to give up just shy of £500 of his salary. So you can see that £480. It's worth noting there's no upfront costs on schemes like this. It's all done through the salary, no deposits to be paid. So this is the true monthly cost that George is going to be sacrificing. Because he's basically saying to HMRC, I no longer want to take £480 of my salary, I'm going to have a car instead. He no longer needs to pay income tax or national insurance on that £480, which drops his income tax and his national insurance, as you can see in the example given. To illustrate my point from earlier, the benefit in kind or company car tax is just £10 or nearly £11 a month for this vehicle, and therefore his take-home pay does drop down to £1,980. The difference between his without sacrifice and with sacrifice take-home pays is just £340. So that is hopefully helping to illustrate where those savings come from and what the true cost of this benefit looks like. £340 for a car with all those services included. So ideally, it will seem very, very competitive in the current market. If we just head to the next slide, please. So this is just to summarize what the key benefits are. I think Basil mentioned right at the beginning of the call, there are some very key environmental benefits to electric cars. It doesn't answer everything, but it certainly does remove any tailpipe pollutants. There is no emissions coming out of the tailpipe on these vehicles. It is something that we're very proud to be kind of championing and pioneering in the UK. From an employee's perspective, there is a clear monetary benefit here as well. So not only are they making the sustainable choice where needed to make that move to an EV, they can save upwards to 40% on this benefit, rather than doing it out of their post-tax pay at a forecourt or a dealership. And they will achieve that by paying less income tax and national insurance over the course of the year. From an employer's perspective, there's a few different things to focus on here. Again, on the environmental and the sustainability piece, these vehicles are company cars. They can be treated within kind of your emissions reports and your ESG targets, and Octopus will provide support to help measure that. And then from a business savings perspective, you are able to make a national insurance contribution saving. And then lastly, and this is often potentially a forgotten thought, is that this is absolutely a benefit that helps keep your staff engaged. We've got a few white papers that we will be able to share out that explain through surveys where staff are asking for more benefits. They are asking for ways to make their salaries go a little bit further. And one of those key benefits that have been asked for, I think 70% of staff that we've surveyed have stated that they would be very interested in exploring an EV salary sacrifice scheme. So certainly something from an attrition and retention point of view to be thinking about. What I will do now is I will pass over to my colleague Tom, who will just take us through the next half of the slides.
Awesome. Thank you, Stefan. Please do keep those questions coming through on the Q&A if you have any queries around what Stefan's going through. But I'm going to sort of come on to a little bit more about why electric vehicles and actually how you can achieve the key success on setting up a salary sacrifice scheme. So first and foremost, why should we adopt specifically electric vehicles in comparison to sort of your petrol, diesel or hybrid equivalents? I think Stefan's been touching it throughout the slides he's been going through, but I think first and foremost, it's all about the net zero targets. As individuals, we have our own goals, which we're trying to set, but also as employers, we're trying to hit B Corp status or go through certain tenders or actually show that to our customers and our employees that we care about hitting sort of our net zero or sustainability goals. And an EV scheme can directly impact or support those net zero aims. So in 2022, we saw 99 million tons of carbon dioxide come through domestic transport. And over half of these was specifically related to cars themselves. So we can see the real need to actually switch from petrol, diesel or hybrids to electric vehicles to reduce those tailpipe emissions. And businesses can save sort of 8.2 tons of carbon every year by joining a salary sacrifice scheme, specifically a fully electric one. So it's really, really important that we sort of switch over and bolster our sort of green agenda by adopting EV schemes. And we do have a level of carbon reporting through Octopus EV that we can support businesses with through our sort of portals that we provide, but also Mobilityways as well can do that through their servers as well, and sort of that measuring your commuting emissions too. Away from the kind of net zero targets that are obvious with an EV scheme, there are actually cost savings to be made through electric vehicles, and this is very much for the in-life cost savings. So if we remove the idea of how salary sacrifice can actually be the most cost-efficient way to adopt an electric vehicle and actually look at ownership of an EV, EVs don't need to pay road tax. We're seeing more clean air zones appear throughout the UK, where there's going to be more tax for those more polluting vehicles. Again, electric vehicles will be exempt from these areas, But also on top of this, there are lower charging costs than the refueling costs that you see with petrol or diesel, especially if you've got the ability to charge at home. Octopus Energy, as well as other firms out there, have dedicated electric vehicle tariffs, meaning that you can charge your car overnight at a really, really cheap rate. A little bit like those Economy 7 ones you might have seen previously, but they're a lot smarter in sort of the new forms. So there are lower charging costs in terms of using an electric vehicle, which means your total cost savings in life can be reduced. And just touching back to why an electric vehicle salary sacrifice scheme in terms of that tax saving and benefit in kind rate, which Stefan was talking about in terms of a company car tax, EVs just have a much lower company car tax than their hybrids, their petrol or diesel equivalents. And that's why we do see electric vehicles as the best option if you are looking at a salary sacrifice scheme for your employees, because it just simply means those cost savings an employee can see through those tax savings can actually be seen sort of more visible in that space. So sort of only 2% for EVs at the moment. And finally, future preparations. Electric vehicles is brand new to a lot of people. And so there's an educational factor as well, which we at Octopus want to provide, but also salary sacrifices provide in general. So we know that there's the sale of petrol or diesel cars on 2030, and then hybrids are banned in 2035, the sale of new hybrids as well. So there's an element of educating your workforce to be prepared for these changes, and also provide that sort of consultation piece so individuals know how to charge their car, know what the cost savings look like, and actually know what electric vehicles are out there. So what better way to do that than join a scheme and get all the supporting services, such as those consultation sessions, webinars, and all those sort of added on or added value pieces through a salary sacrifices scheme as well. Next slide, please. So we understand sort of why electric vehicles are sort of the best route for a salary sacrifice scheme, but then how do we actually make sure we're going to set up a scheme for success? Stefan was discussing some of the employer savings which can be made through a scheme like this, and that's specifically in the employer national insurance savings. Now, with our scheme, we allow businesses to choose how they what they do with this employer national insurance saving. But ultimately, we always do recommend, and as a standard setup, to pass back 10% of this back to the employee. What this means is you're passing back a level of savings, so that employer saving back onto the employee's lease, which naturally reduces the cost of that lease. We see massive uptake, or much more uptake, with those businesses that pass back that 10% compared to those employers which don't pass back any. And actually, we've seen sort of double the uptake in that space. So if you do really want to see scheme success, really want to see employees access EVs, we do recommend to pass back 10% of that national insurance. What this does mean, though, is that you still are saving circa 3%, which means that the scheme is cost neutral for you as a company. So it's sort of still not impacting you as an employer. The other areas which are key to take note of is inclusion of insurance. So we provide a fully comprehensive insurance package as part of our scheme, on top of the servicing and maintenance, damage waivers, and all the other services of the scheme. The one thing which is optional is the insurance piece. Some schemes choose to opt out of it. We always say to opt into it, because it just makes life simpler from an admin perspective, and it makes it easier to switch for those employees, because they know everything is put into one neat package as soon as they take that lease agreement away. And then finally, open the scheme to all. As mentioned at the beginning of this presentation, we have a scheme, and salary sacrifice schemes are there to be flexible and fit in with employers' needs. But we've always noticed those who open the scheme to all will always find employees to adopt an EV, because there's always someone thinking about switching. There's always someone whose car is coming to their sort of end of life, and they're looking at what the next options are, and they're probably thinking, is an electric vehicle the right options for me? So opening the scheme to all, and not just for senior management team or certain sections of the business, will mean that suddenly you'll start to see the best uptake. And also you start to have those conversations in the office where people start discussing the electric vehicles around the water cooler and spaces like that as well. So it sort of drives sort of interest and engagement. So reducing those eligibility restrictions from the offset naturally leads to scheme success in the future. Next slide, please. This scheme, though, it wouldn't be anything without the promotion, and we don't ever want to leave employers feeling they're left in the dark without any knowledge of how to promote a scheme like this. As I say, electric vehicles are new to a lot of people, so it's all about ensuring there's education and understanding around how EVs work and actually how salary sacrifice works as well. I know for myself, when I first joined sort of Octopus EV 3 years ago, salary sacrifice was a confusing concept, but now sort of I feel like I know it like the back of my hand. So it's all about being able to promote this and provide that educational piece. And we do that at Octopus for you. We want to be there to support any kind of marketing and also make this scheme exciting to drive up that engagement. So this kind of comes in sort of 4 different factors. First and foremost, email updates. We both have employer and employee newsletters, which we can provide the latest news and updates on what EVs are available. I'm sure you've sort of seen in the news about lead times around electric vehicles or cars in general. We do have the option to ring fence secured supply for our sort of users on our scheme, and we use these email updates to let our customers know what kind of vehicles we have on that secured supply as well. So then customers can sort of get in touch with us and actually question sort of what the prices are looking like. On top of this, we provide charge-up events. Now, this can be a whole range of different types of events, from drive days, bespoke Teams days. So we'll come to you at your offices, set up a stall, let people come and ask us questions, or actually go through webinars through either virtually or in person for sort of companies as well. And this can range from anything from the world is warming, what can my business do to help? And we give a bit more of an overview of the sort of EV and energy landscape and what that is looking like, just from the basics then to salary sacrifice, how it works and how customers can get on board. So we really do try and create bespoke events and webinars for our employees to promote these kinds of schemes and actually add value services as well to sort of explain actually a little bit wider from the sort of EV market too. And finally, we are very much a digital first company. I think we like to describe ourselves a bit like a tech company, which are doing leasing and energy and all the other services which come on top of it. So we have dedicated portals for the HR or scheme leads to keep track of every order. So they can go in and they can access all their salary sacrifice reports. That's where they also access their carbon reporting reports and understand sort of who's interacted with the scheme and what vehicles are delivered. And on the flip side, we have employee portals as well. So it makes it really easy for employees to jump on a quoting tool, see what vehicles are available to them and actually get a sort of quote sent over. And if they are really interested in that EV then and there, they can actually sign for it online too. But we have a host of sort of one-to-one consultation sessions which employees can book into, whether they're at the point of ready to order or if they're actually just wanting to learn a little bit more about the scheme and EVs out there too. Next slide, please. So the screen kind of just highlights or gives you a bit of a visual representation of what I've been speaking about. So those sort of emails come through sort of a phone or through your laptops. We'll be able to keep you notified about any sort of EV changes. We have dedicated Octo packs to help you kind of promote it, either be that through socials or order merchandise. You might have seen those pink fluffy Constantines plastered all over the UK. You can actually order them to your front door. So actually make sure they're sort of living and breathing the Octopus lifestyle and that side of things, but also bespoke events where we're actually come and bring electric vehicles to you. There's no other better way to understand how EVs work than actually getting bums in seats. So that's what we really want to provide as an added value service to any schemes. Awesome. Next slide, please. And then finally, sort of how do we work with, I guess, Mobilityways in this space? We have a direct partnership with Mobilityways, where for us, we both have the main sort of idea of how can we promote sustainable transport solutions for sort of clients and customers out there in the UK. So first and foremost, we're here to engage your workforce. And so we do collaborative events like this to really highlight and explain what new or legacy sort of sustainable transport solutions there are out there. We both have, so Octopus have our own way of monitoring uptake through those sort of HR portals, which we have for employers to access. But on top of that, Mobilityways also have their own sort of portals as well. And we work together to make sure that the data is shared between the two of us. And finally, it's all about reporting that impact. So these schemes wouldn't be anything without highlighting how much carbon you as a company have saved, which then you can utilize for any kind of B Corp applications or tender applications or promotions which you're wanting to do as a company to show your net zero targets. We work with Mobilities as well to sort of measure those emissions which has been saved through EV schemes like this, through our portal, but then for the Mobilityways, they actually have their own methods to measure other sustainable transport solutions impacts on your company as well. So we're really there to work in conjunction to promote sustainable transport solutions such as electric vehicles for our customers and clients. Awesome. I think we're going to move into now, I've noticed a lot of the questions coming into the Q&A panel, but I believe we're going to move into a Q&A and see sort of what questions have sort of come through throughout the duration of this.
Excellent. Thank you, Tom and Stefan, for taking us through those slides. We knew that there'd be lots of questions on this topic, so we were deliberate in our agenda to make sure we had ample time to really go into the weeds on specific questions. Lots of questions have been flooding in. Please do make sure you add your questions into the Q&A panel in Zoom. I've been looking through the questions as they've come in, and I think there's some of them are on similar themes, and we might answer several of them together. But there's quite a few related to the technical process of running a salary sacrifice scheme. And so the example that we shared there was for somebody that was not a higher rate taxpayer, someone earning about £32,000 gross salary. Could one of you maybe talk a little bit about that in more detail, and so particularly how the savings escalate if it's somebody that's a higher rate or an additional rate taxpayer, and perhaps what is the typical uptake for people who are on a standard income tax rate? What's the minimum income they have? And also there's some questions related here to the impact on pension contributions.
Yeah, of course. I'm happy to try and answer as many of those. If I miss some of the answers, do ask me again, Basil. There's quite a few there. But I'll start off with kind of how that saving kind of escalates depending on your tax bracket and things like that. So you're exactly right, Basil. The example we shared, we always like to share kind of the least amount of savings that is possible. And I say least with a really hesitant tone, because we're still talking about a 30% saving versus going and doing this again at a forecourt with your post-tax pay, kind of your pay slip when it's in your bank account. So for the real basis of salary sacrifice and the saving that is found in here is through giving up salary and therefore no longer needing to pay income tax or national insurance on that salary you've given up, or sacrifice is the technical term. So this will ultimately depend on the salary you're giving up. Where would you have, what tax would you have paid on it? As a basic rate taxpayer, you pay 20% income tax on your earnings and you pay 12% national insurance on those earnings. So the combined saving is 32% saving. You have to give back 2% roughly as a company car tax. That leaves you a 30% saving as a basic or standard rate taxpayer. If you are a higher rate taxpayer, so you're in that kind of bracket of earning, I think it's over £50,000, your tax changes slightly. You pay 40% tax, income tax on the earnings in that bracket, and you pay 2% national insurance for anything above £50,000. So that is 42% of income tax and national insurance savings combined. Again, 2% benefit in kind or company car tax paid back, bringing it to an average of 40% saving. So that's where it's calculated. Obviously, I completely understand that kind of the UK tax rules can be complex. So this is very much a general answer based on the general tax scenarios for most UK employees. It could absolutely change if you've got multiple jobs or you're self-employed or have a business on the side, all of those kind of things. And there is also, if you are a kind of a higher net worth individual, you're earning over £100,000, things can change quite dramatically there as well, with things like tax-free allowances lowering and being able to regain those. And there's a lot in there that I'm hesitant to go into loads of detail on today. All I would advise is if this is something that is a hot topic, you've got a lot of staff in variations of pay and different scenarios, reach out to Mobilityways. If you're already a client, reach out to Octopus if needed. And we're happy to go into more detail and answer on that one-to-one basis there. So hopefully that helps answer a bit.
Yeah. That's great. And do you roughly know, where the sweet spot is? Because basically the same car, the same package, but someone who's a higher rate taxpayer, their take home pay will be savings will be less. It will basically cost them less money if there are. So do you have rough figures about what percentage of salary sacrifice is taken up by different earning brackets? Because for organizations, they could think about their workforce and whether this is the sort of solution that they're likely to see be very successful or not.
Yeah, it's a great question, and I think you are right. I think I don't have the exact numbers, but I've got a rough idea of this. When we look across our business portfolio, we've got about 4,000 businesses live with these schemes. They've of course got salaries of varying amounts. It's almost a given that the higher earners and those on those higher tax brackets, or the upper end of the basic rates, are only maybe 40 to 50,000. Getting a new car or a new car lease is something that is more common in those salary brackets anyway, regardless of whether it's EV or combustion engine cars. New cars is something that has always been seen as kind of when your salary is higher, it's a benefit that you can look at. So we do find uptake is swayed in that world. Obviously, the additional advantage of salary sacrifice benefiting higher rate taxpayers just makes it even sweeter. So as a percentage, I know that across the board, our uptake percentage to a live scheme is about 5% employee uptake in the first year. That's averaged out across kind of all salary brackets. We don't have that data more detailed. There was a question I saw around kind of like what is the minimum salary required to look at a scheme like this, which I'll answer now because I think it's probably relevant. We tend to find that any employee with a salary of over £30,000 will find benefit through salary sacrifice. Obviously, it depends on their circumstances and whether they're wanting to lease a new car. What we do plan in the near future is to look at nearly new vehicles as well. So vehicles that have maybe been on the road for up to a year, they're still in very good condition. So we still believe the experience of having these EVs is great. And having these cars is great, but the lease prices will be a little bit lower, and therefore we're hoping to really begin to offer these schemes out to those in maybe slightly lower salary brackets than that as well.
So a few questions, and this is why it's really important to ask any question, even if it seems simple, because there are some questions coming through here about the basics. And so one of the questions is, can it be used with hybrid cars? And I believe that there's no longer, although there previously was, but there's no longer exceptions that allow salary sacrifice for hybrid vehicles. This is battery EVs only, isn't it?
So it's a good question. So through Octopus EV, we made the decision to only offer electric vehicles through the scheme. It is possible to set up a salary sacrifice scheme for petrol and diesel cars and hybrids as well. That does exist. It's not something that we support. We are more focused on kind of that future vision, focusing on the sustainable zero tailpipe emission focus, and obviously we're benefiting.
I think actually even more so, I think some of those schemes, if you have a legacy scheme, it's still HMRC compliant, but I think you actually can't set up new schemes now with the tax savings. You can obviously have company cars
the benefit, they're very few and far between. The company car tax rate is just incredibly high. You're often saving your income tax and your national insurance, but paying near enough all of it back in benefit in kind is what we tend to see. So yeah.
So, another sort of simpler question is, the employee never owns this car, and so do you want to just talk about typical lease lengths and how that works?
I'm happy to take this one, Stefan.
Yeah,
So we base our lease agreements on contract hire. So this means there are set lease agreements terms, which means the car does get handed back to Octopus at the end of these terms. What does this look like? 2, 3, or 4-year lease agreements is sort of the flexibility across that. And then the individual will also choose their mileage length as well, which can range from 5,000 miles all the way up to 30,000 miles. Now, that being said, Octopus are our own leasing company. We're not a broker. We own these vehicles, so we lease them to the company to then allow a driver to drive that car for work or sort of non-work reasons. I know that was a question which cropped up there. But what this means is if an individual does fall in love with the car, they can let Octopus know sort of 3 months before handing back the vehicle, and we can give what that buyout price would look like. We just can't give what that price looks like from the get-go, because we have sort of our own calculations on how that actually operates. So ultimately, they are based on contract hire, but there is that option if an individual does fall in love with the car to let us know, and we can give the buyout price. Often though, the electric vehicle market is moving so quickly that within that 2, 3, or 4-year period, there will be another electric vehicle which an individual wants to look at, and they can probably get it for a salary sacrifice scheme, so they can make those sort of savings on that new model which has come out. So it's often the attractive part is actually hand the car back and get a brand new EV through a salary sacrifice scheme again.
And there's quite a few questions here about some of the practicalities that you guys touched on in relation to it's the company that's hiring the car, then it's technically a company car that then the employees paying for in their pay slip. What happens when an employee resigns, goes on paternity leave? What goes on with the car? Is the employer stuck with the car then? What happens?
So yeah, I think the really important part of this is the crux of salary sacrifice as a business contract hire lease. So the lease agreement is going to be going through the company, and then the company will allow a driver. This means any invoices that we send out will go to the company, and the way the company then recuperates that invoice cost is by taking it out of that individual's gross salary. So the process is always going through the company. So as you sort of mentioned there. Now, what this sort of begs the question of is, well, what happens if an individual leaves in the life of the contract? Does the company get stuck with a EV or sort of in their hands? Are we going to continuously invoice them, or are we invoicing the employee? Sort of how does it all operate? We have built a scheme to be fully inclusive and to reduce these kinds of risks. So we have early termination protection built into all of our schemes. It's set as standard. You're not going to have to pay sort of a fee to access that. It is just sort of included in our salary sacrifice proposition. What this means is for any unforeseen circumstances or life events, so as you mentioned, resignation, redundancy, dismissal, or if you don't need the car anymore due to personal reasons, parental leave, or long-term sickness, or loss of driving license due to medical reasons, these kind of unforeseen circumstances, what it means is the company just needs to inform Octopus of the situation, and then through our early termination protection, the car can be handed back to Octopus at no cost to the employer or the employee. All we will do is come and do an inspection of the vehicle and pick up the car. Assuming the inspection of the vehicle, we have a £500 damage waiver to cover any kind of impacts inside or out. So assuming there's no actual impacts or a missing door, it means then we can actually just pick up the car sort of for no cost on that side. And then the employee and employer are sort of A-OK, and there's no fines to pay there.
So some of that is very much unique to Octopus, isn't it? And so because I think that's some of what we've been talking about today is salary sacrifice EV schemes in general. So for example, the national insurance savings, etc. But a lot of those risk waivers are very unique to what you guys do. And so we've got a question here, for example, someone's been trying to set up an EV scheme for 2 years, and the barriers are that the contract sits with the company and there's a lot of risk there. But it's possible that the companies they're trying to make the arrangement with just don't have some of those protections that you guys have built into your contract to basically de-risk the company.
Yeah, exactly. I think we aren't the only company who are doing salary sacrifice, and we'll be the first to sort of say that as well. And while we can't change how the mechanics of salary sacrifice works, what we can change is our proposition that we offer to employers and employees, and that's with how we deal with our early termination protection, that we don't put price caps on vehicles. You can hand back any price vehicle And, we are humans at the end of the day, so we will actually open up that conversational piece as well. But that also includes the package, which we also offer. So I've just seen a question coming around, do you offer salary sacrifice charges? So while we can sort of create bespoke pieces around the early termination protection for companies, we also offer specific bespoke packages for our salary sacrifice bundle. So we offer everything to hit the road, that's servicing, maintenance, AA, roadside recovery, all those aspects, that £500 damage waiver, but also we offer at-home charging and energy solutions and on the road charging and energy solutions. So if you have a driveway and are able to charge your car at home, we can provide you a fully funded smart charger to be fitted on the outside of your house. That is free of charge, includes a standard installation, and will provide you 4,000 free miles if you switch to our EV tariff Intelligent Octopus, which typically you would because you want to get that off-peak charging rate. I live in Hackney. I definitely don't have a driveway, but I still want to use my electric vehicle, which means that I'll be charging on kind of that public road. So I would take the public offer or the public charging offer we have, which is basically we partner with our in-house charging card called Octopus Electroverse. Over 35 different networks in the public charging arena, can have different areas of accessibility. The way which Octopus Electroverse works is it gives one card to access multiple different charging networks, all through the same payment system. So we'll credit that card with 4,000 miles, which is circa £600, so you can get going charging on that sort of a wider domain. So what I guess I'm explaining here is salary sacrifice. There are various different schemes out there, but everyone has a different way which they approach it. Ours is meant to be de-risk it for the employer and employee, but also make it as easy to transfer to an electric vehicle by offering those in-house charging and energy solutions as part of the package.
And so just a few rapid fire ones here. Even though this is legally technically a company car, in essence, how this works with all salary sacrifice EV providers is that it's their personal car day to day. And so that means, for example, got questions here, they can use it at weekends, leisure. One question here is, what about partners? And so insurance and who can go on it? How does that work?
Yeah, quite a quick and easy one. So if they opt for the insurance that's included in our scheme, the standard is it will offer the ability for 3 drivers to be listed per car. There'll be the employee and then 2 others. They can be relatives, they can be friends. The key thing to note is that the pricing of the insurance is typically rated on the youngest driver. So when you're going through that process, make sure you've got the date of birth of anyone that you're looking to have insured. But yeah, 3 drivers per vehicle, all covered for standard use. Business use is reserved for that main employee.
So on that insurance note, we have a question here about how the insurance cost is calculated. Of course, you've got some young drivers paying thousands for insurance, and very experienced, safe drivers with no history, they might be paying only a couple of £100 for insurance. How is the insurance calculated? Does it take account of their no claims? Can they earn no claims bonus?
Yeah, great question. So the technical way that the insurance is set up is through a fleet insurance policy that is taken out for the entire business. And then each car has a listed nomination of 3 drivers that can drive each car. So as it's a fleet insurance, there are some key benefits. One of the key benefits is that it's a fixed premium for the entire duration of the lease. So regardless if you need to claim, it will not increase in value in future years. So you can really set your car costs in stone for 2, 3, 4 years. And it also we don't require as many details to be able to get you insured. So it is purely the car you're interested in, the location the car's going to be staying, so the postcode, and then typically that youngest driver's date of birth. We don't require anything more than that. On the flip side, or in terms of its downsides of doing a fleet insurance, sorry, I should add the other additional benefit is that you get those income tax and national insurance savings because it goes through salary sacrifice. The downside is where we look into no claims and things like that. As it's a fleet policy, no claims discount is not applicable. So what we would advise in those scenarios is if you have many, many years of no claims discount already, speak to your current insurer before moving on to a salary sacrifice scheme. Talk with that insurer, see if there is a way to maintain those no claims while you're going on to a company car scheme. And then look to continue that on whenever the time is right to no longer salary sacrifice car in the future. Our insurer is happy to provide a statement letter when you do kind of exit the scheme. to say whether you've had claims or no claims over that period of time, which some insurers can take as an extension. It's by no means a guarantee, and it would be hard to kind of guarantee that at the offset. But yeah, so the drawback, you wouldn't get a no claims discount, but fixed premium, you still get the salary sacrifice savings, and we require less data to be able to quote you.
So we're going to take 2 or 3 more questions focused on some of the administrative operational sides of salary sacrifice EV schemes. And then I think we'll move to a different sort of category area, which is some of the environmental side. And that's quite a lot of the questions coming through. So all those people that are putting the environmental side questions in, don't worry, we will come to them in just a moment. We'll just have a couple more questions on the more practical side, and then we'll transition to that. So one question here, it kind of almost, as an employer, seems too good to be true, right? Because if I've got, and we've got here on the call, lots of large organizations, thousands and thousands of employees. And so if I'm a hospital, I've got 10,000 employees, and there's uptake of a few % of my staff moving over to this, the savings in employer national insurance would amount to millions, potentially. It depends on uptake of the scale. So I guess the kind of thing that is coming through in some of the questions is, is that too good to be true? Is that really the case that my employees can get a car with insurance, a new car, because these are all new, brand new car, with insurance, partner can insure it, maintenance, no road tax, cheaper refueling because it's EV rather than petrol diesel, for several £100 salary sacrifice, much cheaper than they would if they went down retail and bought it separately or leased it separately, and the organization could save a fortune. I mean, in practice, does it really work that way, or do some of those savings get eroded in different ways?
Yeah, as much as I would love to say, yeah, it's all savings, happy days, come speak to us, we'll get you signed up. I think there is some realisticness we need to put into place here. So on paper, you're exactly right. If the employer decides to retain all of those national insurance savings and they get a decent uptake, let's say it's even 3% rather than the 5% that I've calculated for a business of that size, you are talking about, over the course of 3-4 years, millions in savings quite easily, if not maybe hundreds of thousands, depending on car uptake. Some things to bear in mind. Obviously, this scheme is going to require administration. So there is going to be additional internal costs. How to measure it is very, very difficult, but there is going to be internal kind of processes that need to be built out. There's going to be contracts that need to be looked at. That's going to take up some staff time while we go through that process. So nothing's ever free, but on the books, you will see the more staff that take out salary sacrifice EV schemes, the less that employer national insurance bill is each month. That will be a direct correlation. What you then do with that saving, where you allocate it, maybe you justify it back to your HR team and hire them an additional staff member to cover that administration, or you look to put it towards maybe some public charging or supporting the install of charging infrastructure at the hospital, whatever it may be. There's lots of things you can do with that funding, with those savings.
And so in terms of that administration, is it something that once up and running, it's somewhat sort of seamless? There's a sort of process that makes it slightly more complicated, or is it mostly tied to when someone takes out a car and then the ongoing admin for that individual is not so much of a burden? There is a question here also about how does someone sign up? What's the process? Is it all self-serve? Does the employer have to okay it? Yeah,
a lot of great questions there. I think the majority of the admin is at the early offset. So in terms of the way the process would work, an employee would typically kind of self-serve onto our quotation tools. They'll browse their vehicle opportunities, speak to our team, and all of those things without any employer requirements needed there. It's only at the point when the employee kind of clicks the green button, clicks the sign button, signs contracts, that the employer is then notified of a vehicle application. I won't go into all the semantics, but there will be a HR approval step essentially where there's a couple of documents that need to be checked and signed. This is in place as the employer is ultimately responsible to ensure employees aren't going below minimum wage, and wanting to make sure those checks are in place. So there is a step there where someone's going to need to do some form of calculation to okay it, and again, countersign those contracts. After that point, there's not normally anything that needs to be done until the vehicle is delivered. So Octopus looks after the employee throughout that entire order journey. And then when the vehicle is delivered, we will start to share our monthly reporting, so monthly invoices, so consolidated invoice, monthly consolidated payroll information as well. So your payroll team can start those recurring deductions. The good news here is it's a set reduction for a set amount of months. There's no real fluctuation on a monthly basis. It's set and fixed. So it should be a set up, set to recur. I can't say I'm a payroll professional, so sorry if I'm offending anybody with how complex it is, but set it up, let it roll for 48 months, however long it may be, and then you may need to do a change later down the line. The only other thing to be mindful of is if your business needs to complete P46 forms, which are to acknowledge that a employee has received a company car, or completing those annual P11D forms as well. We provide all the support for all of this. It's just potentially some admin there to bear in mind.
Okay, now there are lots more questions about some of the administrative practicalities, and unfortunately, just due to time, we're not going to be able to get through to all of those, but we will follow up. And so where they are not anonymous, we'll drop you an email after this. If you've got asked an anonymous question or you're not sure, it will be best to email us if you've got any more specific questions about the intricacies on team@mobilityways.com. In fact, Jackson, if you flick to the next slide, I think we've got that email there. So if you have asked us a question that's about the administration or technical side of this, or any question actually, team@mobilityways.com, and we will hook you up with Octopus and be able to respond to those questions. We're going to move along a little bit to finish up here with some of the more environment-oriented questions. And some of them are quite technical, and so we'll see how we get on. But we've got a couple of questions here related to the scopes of emissions, and basically we're a specialist in commute emissions. That's a scope 3 emission of employees getting to and from work, which counts as a scope 3 emission source. The question really is, if this is a company car, does the company need to account for this as part of a leased asset? And so is there an emissions burden on the emissions? Is there a scope 3 emissions calculation they need to do for leased assets? So I don't know if either one of you has an answer for that, if it's come up before, or if it's something for us to take away and come back on.
For me, I think it's something which we'd have to take away and actually work out if there is a reporting for the increased leased asset emissions, as we only report on the direct sort of tailpipe pieces for that through our sort of carbon reporting. So that's the element which we provide to employers. So we aren't specialists directly in kind of those scope 3 or leased assets emissions on that side, but it's for me, it's never come up in kind of my conversations, but I don't know if Stefan, in your experience in the account management side, if it's cropped up.
Not from a reporting emissions, about the vehicles being like an asset, and that has come up more financially based. Yeah. So happy to answer further questions if anyone has those.
We'll follow up. I think even though legally it's a company asset, and in practice it's really a personal asset, and so but I think it would be one to follow up there. And I guess the pattern of emissions will probably be very similar to the financial side of things. So if the company's putting it on their balance sheet, then it probably means that the emissions from it do need to count towards that. But if they're not putting it on their balance sheet, then probably not. So one to follow up with. I've got a question here which is about government commitments on EV salary sacrifice. As we know, over the years, the tax regime has changed to incentivize and encourage different behavior. Is there any public government policy about how long term this current policy will be on EVs?
Yeah, so I think the best way to look at this is the push is for electric vehicles to be adopted. That's what the government would like to see us do. They're setting those 2030 and 2035 targets, and naturally they're wanting to provide schemes or ways for people to adopt electric vehicles. And salary sacrifice has been the key driver for people to adopt electric vehicles, purely because tag price on EVs looks more expensive compared to petrol or diesel. However, if you run it through a salary sacrifice scheme, suddenly they become more affordable. The way which it's been played out, I guess, by the government is through that benefit in kind piece. So we've mentioned that it's at 2% up to 2025. Then at 2025, there'll be an incremental increase by 1% per year. That means it goes up to 2028. We're not sure what happens after 2028 there, but we know that it's going to stay remarkably low up to 2028. So if that's any sort of signals to the fact that this scheme is not going to slow down before 2028 at least, that we know that the government's still going to be pushing it for sort of employees to actually be able to access.
Okay, great. So I think we're kind of almost coming up to time here. We still have many questions that we haven't specifically touched on, even though some of them we've kind of talked in similar areas. So I think as we draw it to a close here, what I'd encourage everybody with outstanding questions to do is to drop us an email, team@mobilityways.com. The email address is on the screen right now. And one of our team will follow up and we might reply with Octopus EV in tow, or reply directly depending on the nature of the question. And if you want to know more for your organization, you want to have an early stage conversation about how salary sacrifice EV could apply to your unique organizational context, then do drop us a note as well, and we'll gladly put you in touch with Octopus. As you no doubt have found just on this call here, they are very much committed to best practice, to working in a collaborative way, and that comes across as they work with you as well. So just because you start talking to them, don't feel like it's going to be a one-track road of a heavy sales pitch. That's not the way that they operate. And so do feel free to get in touch with us. We'll put you in touch with them if you have any specific questions, or you want to start a conversation with them. This session has been recorded, and we'll be sending the recording round to all those that registered. If you'd like a copy of the slides, do drop us an email, team@mobilityways.com, and we will send you a copy of the slides to share with your colleagues. Thank you very much to all those that have joined. Thank you to Stefan and Tom from Octopus EV. And clearly from the amount of engagement, this is an area that lots of organizations want to know more about. And so it looks like this has hopefully helped a lot in understanding a little bit more about how salary sacrifice EV works. Have a great day, everybody. And we'll hopefully see you on our next webinar. Thank you.
Cheers. Thanks.